record. And let me share my screen. Here it is, share. Okay. Let me just move this over to the side. All right. So inflation, right? As I was saying, because of all of the economic data that's being released, some of the things are self-explanatory. So when they go ahead and say that they're releasing unemployment data, okay, we all know that, right? But when they go ahead and say, oh, we're releasing CPI data, we're releasing the inflation numbers, people are like, okay, what does that mean to me, right? When you're an investor, how does inflation impact you, right? If you are a trader, especially in Forex, oh, that impacts you greatly, right? So what is inflation? Well, inflation is a sustained increase in the general level of prices. That's all it is. So this year, the price of something is $10. Next year, the price of something is $15. Boom, that's the inflation, right? You can put inflation in monetary terms in that respect and say inflation for bread was $5, right? That's all inflation is. It's just the increase in prices year over year, right? And you notice they didn't say the increase, not everything increases at the same rate. That is why they said the general increase, right? A little bit further down, we're going to go into what are some of the items that they're using to determine what is general increase, right? So that's all inflation is. It's increase in prices over a period of time. Let me not say year over year, because sometimes you can track inflation on a monthly basis. You can track inflation on a weekly basis, right? But although that inflation rate will be fantastically low, because can you imagine an economy whereby you look at the price of something on this Friday, you go back there next Friday, and then it goes up and they say, oh, that was inflation. No, that's crazy, right? So inflation is usually monthly will give you lower numbers. If you do annually, it's going to give you higher numbers. If you do it compared to the past 5 years, you will get a much higher number. It's just depending on the time period that you're comparing, okay? So CPI, Consumer Price Index. What is that? That sounds very fascinating, right? You go out, you're talking, and you're like, hey, I was just checking on the CPI, right? But no, CPI is inflation, right? CPI measures the general price level of items that you would find on the shopping list. They say urban, but it's what they really mean. They're just trying to pretty it up and trying to be politically correct. Is they try and pick items that you would see in what they would consider a middle class home, right? So what are some of these items? The staples: bread, flour, right? Normally they don't do vegetables or fruits because there are other things that can impact the price of those. Because if you're in a drought season, it's not inflation why it skyrockets, right? And so they eliminate those, but usually what they're doing is going ahead and trying to determine what is it that is on the shopping list of the average middle class home. How do they judge the average middle class home? A lot of times they'll use where both parents are in the home and usually around 2 children, right? Because they try and be as standard as possible. Okay, so if you go ahead and you say, well, I'm a single mother with 12 kids and expensive that is, no, that is not the typical household, right? oh, I'm a doctor and he's an astrophysicist and we only have one child. So I said, no, that is not the typical family home. Husband, wife, 2 children, typical family home. Okay, so that's what they use to base it on. In Jamaica, the running joke is another definition of the price index is that it is a basket of goods. And in Jamaica, both parties in parliament at some point brought in a literal basket of goods and then argued because they said, oh, the price gone up and how bad could you be because you made the price of bread go up. Well, it's called inflation. And as you saw in the previous slide, it's a general thing. Every year's price is going to go up. You're not running away from that. All right. So that is what CPI is. Consumer Price Index. A lot of time when they get released, they'll just say the inflation rate is this. Now, the reason why they don't just name it inflation rate is because by book definition, the actual inflation rate is the rate adjusted for general gross product or GDP. And so they essentially try to move away from, especially if they're going to be technical, move away from saying the inflation rate to saying CPI, which is the Consumer Price Index. Okay. All right. So what controls inflation, right? We have 3 main factors that controls inflation, and we will discuss how each of those factors actually increase more than decrease inflation. Okay. You have the consumer, that's you and me, right? How do we increase inflation? By spending, right? By spending. When you go ahead and you're there you're saying, oh, I have some money in my pocket. Let me just go ahead, go to the supermarket. I used to only go to the supermarket once a month. Now I can afford to go every week. Well, you're contributing to the increase in inflation, right? The central bank. What is the central bank? The central bank is essentially the inflation monitor, okay? They go ahead and they're constantly monitoring this rate of inflation. And they use change in short-term interest rates, right? Now you're saying the interest rate, I don't borrow anything from the central bank. Yeah, you don't borrow anything from the central bank, but the banks that you borrow from the central bank. So if they change that rate, they can either put more money into the system or take money out of the system. So that is how they do it. Government through fiscal policy. We saw where in the States, through fiscal policy using the stimulus and essentially issuing a stimulus to everybody, is now creating all of these inflation woes, right? So those are the three parties. So it is, I've heard people say, oh, inflation is running away, the government should do something and so forth. It's all 3 parties that would have to do something, okay? So the consumer, you impact it when you go ahead and you're just buying, and especially if you're increasing how much you're buying, increasing the frequency in which you're buying, you're increasing inflation. The central bank, through their monitoring, will either try and increase or decrease inflation. Government, through government spending, a lot of times when government spends, it increases inflation, right? So inflation is not bad, right? So everybody paints inflation as this really bad thing and that we must not have inflation. Inflation means in many respects that you're part of a growing economy, right? What you don't want is what they call runaway inflation. Runaway inflation is essentially where the price of goods go up at much larger increments than what the public can afford, right? And what happens is when you look at the economy moves in a wave like this. And when the economy is going up, that's inflation. When the economy is coming down, that's called deflation. Yes, you can actually have deflation where the price of goods and those things do fall, right? Now, you see that it has it crest, right? This crest is not good. The same way how at the bottom, this turn is not good neither. At the top of this crest, it is the point of expansion. And expansion sounds really nice, but what that normally creates is a bubble. So when you normally hear people talking about, oh, a bubble is forming and those type of things, it's usually because the rate of inflation within that industry is moving at such a fast pace that they're essentially saying that it's going to run away from everything else. And if it runs away from everything else, it becomes very unstable. And then that's when it can come crashing down, right? Now at the bottom, that is called a depression. We all know about the depression. Everybody knows about the Great Depression. Everybody knows about the financial collapse that happened in 2008. It actually wasn't as bad as the Great Depression, but it was actually a depression, right? And so we all know what happens during a depression, okay? So that is where the central bank comes in, right? So you know how I said the central bank is the monitor? The central bank watches that curve and essentially tries to keep it from hitting either the crest that they call the peak or the trough, which is the bottom part. So using their policy, they will try and keep it within a range. And yes, the central banks usually do have a range of inflation that they would consider to be a safe range of inflation, okay? So what are the types of inflation? Well, there are two types of inflation. The first type is called a demand pull inflation. What that is let us say, for instance, you are selling Pepsi and you buy 10 Pepsi each day. Now, normally, when you buy the 10 Pepsi each day, you can sell the 10 Pepsis for $1, right? $1 each. So you make $10 a day. Okay, cool. Now, as people start to demand more Pepsi from you, you're only getting 10 Pepsis, right? So what are you going to do to try and get demand down to where people only want the 10 Pepsis? You're going to increase the price of Pepsi, right? So instead of it being $1, you now charge $2. Some of the people will drop off, some will stay on and pay the $2, and then there you go. You now know that Pepsi costs $2 instead of $1. That is called the demand pull. That is where there is more demand, and so with that increase in demand, it pulls the price of items further up. The other one is called the cost push, right? The cost push is whereby the raw materials. So you are buying water and the company for which produces the water is going ahead. It sounds weird to say produce the water, but the bottle the water, there we go. Go ahead and bottle the water. It's getting it from a certain water table. Now that water table is starting to dry up. They don't need to drill and go much further out to a new water table. That's costing them more money. Now, what are they going to do? Are they going to say, oh, well, you know, such is life, we'll go ahead and just eat the profits? No, they're now going to go ahead and increase the price of their water, right? To go ahead and make sure that their bottom line stays the same. Okay, so if the cost pushes up, if the cost to go ahead and drill further is an extra $500, they're going to make sure that they put that $500 into the cost of the water and make the consumer pay for it. Okay, so that is called the cost push. The cost of the increased cost of producing the item pushes up the price of the item. A great story of cost push is the lawnmower. Back in the day, the lawnmower actually used to be dirt cheap. It never used to cost as much as how it costs now, right? But some bright spark went ahead, and while the lawnmower was running, stuck his hand in the blades, and it chopped off his hand. He took the lawnmower company to court and said, "It's your fault why I chopped off my hand." The lawnmower people said, "No, we thought it was common sense that you shouldn't put your hand in rotating blades." Well, the judge ruled that because the lawnmower company did not have a label specifying that you could not put your hand in the blades, they actually awarded the case to the plaintiff. And from that point, the increased cost of having to make sure that they put warning labels on all the lawnmowers, as well as now paying for retainers for lawyers and the increased cost of insurance, they now have to, that is now an increase in production costs that they're passing on to the consumer, and boom, the cost of lawnmowers is skyrocketed. So that's an example of the cost push. Okay. Now, what are some of the bad things regarding inflation? Well, one of the things is that inflation reduces your purchasing power, right? So inflation went up by 8% and you got only a 3% raise. Well, your purchasing power has now decreased by 5%, right? So so your rent, your groceries went up by 8%. Your income did not move to match it. So your purchasing power has actually decreased, right? And many times that's one of the things is when people say, "Oh, I got a raise, and with this raise, I can do so much." No, you got an inflation raise, right? So you got a 5% raise. Inflation rate was 5%. You can now just purchase the same things you could purchase before. So it actually wasn't a raise. They call it cost of living increase, right? So when you hear them say cost of living increase, it's inflation rates, okay? Other thing inflation does is that it reduces budget sizes for businesses, right? Increased cost of raw materials and those things mean that businesses that were real cashy before and was saying, okay, we can build out this new facility, we can do this. They look and they say, boy, raw materials really killing us this year. We're not going to be able to put that in the budget. Inflation can cause that. Reducing government spending. Remember I said government influences it through fiscal policy? Well, when inflation starts to run away, you tend to see governments pull back on government spending. And so inflation causes that. Finally, the one that we always talk about and always see on the news is increased strain on the poor, right? Why is the poor so impacted? Well, if you're working, chances are you will get that cost of living increase. If you're not working, or if you are essentially below that poverty line, there is no increase to get. Whatever you were making this year, that chances are that's what you're making next year, while the prices of everything is still going up. And so it puts even more of a strain on you. So that's why you'll hear people say, boy, I can't even afford bread anymore, and those type of things, because they're not able to bake in that increase. They're not able to do that. So that is the thing with the strain on the poor. The unfortunate thing is, in both an inflation and deflation period, the poor gets hurt, right? Because during deflation, it hurts businesses because they have to start reducing the price of their items. And once they go ahead and reduce the price of items to a certain point, they start saying, look, we've done all we could regarding the cut of prices. We need to start saving money other ways. And that's when layoffs start happening, businesses close, and those things. So inflation is bad for the poor, deflation, bad for the poor. So that's an unfortunate thing. Okay, why can't the government stop inflation? Well, inflation is a natural occurring process. Other thing, the government is not the one who monitor inflation. It's the central banks that monitors inflation, right? The government what the government does, right, is they'll work with the central bank. So the central bank will go ahead, they work together, and the government will go ahead and use the monetary policy to see what they can do to help slow down inflation if it's running away. Manufacturers may go ahead and look for alternative sources to try and moderate the effect of inflation. So let us say, for instance, they were getting paper from this manufacturer and the manufacturer, they increased their price. Well, rather than going ahead and increasing the price of their items, they look for another solution, cheaper or within the same price of what they were paying before, so that they can keep their price levels stable. Okay. Inflation and investing. So you guys heard me talking with all of this and was like, okay, why is he talking so much about the economy? Well, sorry to say, but when you're investing, the economy does play a role, okay? Well, if you're investing in a company, if you're investing in Bitcoin, if you're investing in currency, then the economy plays a role, okay? How does it impact you, especially as it relates to stocks? Well, one, it reduces the impact of EPS, right? On my YouTube, I want whoever was paying attention last week to tell me what is EPS. I'm not going to tell you, right? All right, wasn't expecting a pop quiz in there, right? But it reduces the impact of EPS estimates of the company, which decreases their share price, okay? So that goes in line with what people say. Now you're understanding why people say during inflation, stocks go down, right? That is why. It usually impacts their bottom line. And if their bottom line is impacted negatively, their stock price goes down, okay? It increases the volatility of currencies. So for anyone inside here who's dealing with Forex, you will see that this week has been extremely volatile because each country was releasing their inflation data, right? And so 1 minute you're riding good, they release inflation data and inflation come up a little too high or a little too low, and boom, you just see a straight line on that graph, right? So it increases the volatility of currencies. It also makes investing a lot less predictable, right? So let us take US, for example. At the beginning, I was saying that now they don't know which way to turn, right? Because with the stimulus and all that, inflation has been flying. And so now they're like, okay, we still haven't recovered. So do we put in monetary policy? Do we go ahead and do we make the Federal Reserve do something? Does the government do something? What do we do at this point in time? And so it creates a lot of unpredictability as it relates to investing. How to invest in high inflation? Well, one is, and this is one of the things that many people have been talking about, is a lot of the retail investors like you and I, they're saying in the not too distant future, a lot of us are going to get creamed on the stock market. Why? Because we tend to do what is called FOMO. FOMO means fear of missing out. So we look on two graphs and we see it going up and we say, oh, we got to get inside this investment. Oh, this company is a very good company. I'm going to go ahead and invest in it, right? If you aren't protected, if your portfolio is not protected, and essentially you've just been riding this wave going up, remember what I said before? At the top, right? It usually tends to create a bubble, okay? So when that bubble is created, what happens? One day it goes pop. And when it pops, boom, is one straight line coming all the way down. And so many are going ahead and warning that if inflation continues to run the way how it's running, that a bubble may be forming. And if the bubble pops, it's mostly going to be the retail traders that are going to be most impacted, because we're not going to be the ones who see it coming. Okay? I don't know what I said. Did I say something close to echo? Okay. So the other thing is, when you see inflation starting to rise and so forth, start looking more towards income-based investments more than equity-based, okay? We covered that. You see why I do these stages, right? You want things like bonds. That is why bonds do great in high interest times. People shift more over to bonds because it is not about the growth of the bonds, but they're just looking for a steady income so they can ride out this time and then go back over into equity for the big growth, right? But you want to go ahead and make sure you're looking at some income-based investments. And if you are in trading, if you trade stocks, if you trade Forex, if you do all of that, learn risk management. Can't tell you not to do it, right? That's the whole point of trading. But during times like this, remember I said there's increased volatility, which means something that's riding up today crashes tomorrow. And so you want to make sure that you're not like the investors of old that would go ahead and find the top of a building and chuck off the building. Okay, I don't want any of you guys to chuck off a building. So please learn risk management. All right. So thank you guys. I really hope that this helps you kind of understand a bit more on inflation. And when you hear people talking about inflation, when you're watching the news and so forth, you know, have a bit more insight as to what they're talking about, and don't let anyone essentially take you for granted and try and put you in ignorance in order to win a vote, right? So thank you guys. I did see that I have gotten a couple more subscribers on my channel, but I'm not seeing all of you guys as subscribers on my channel. So I'm going to need you guys to go ahead and subscribe. All right. All right, guys. So I will see you guys next Thursday at 7 p.m. my time, or 8 p.m. some of you guys' time, right? All right, guys. Have a good night.